Hello and welcome to Global Business, CCTV's new program with insights into Africa's ever-changing business landscape. From Nairobi to Johannesburg, Lagos to Cairo, from small businesses to large-scale corporates, we take you directly to the entrepreneurs making the headlines. I'm G2 Abraham here in the Kenyan capital of Nairobi, where it's 9 p.m. It's 2 p.m. in Washington, D.C. and 2 a.m. in Beijing. Wherever you're joining us from, welcome. Fitch praises Egypt's move to raise fuel prices. But can Egyptians expect any good from the move? And South Africa's labor minister is hopeful to an end to the metal workers' strike. And we feature an entrepreneur who is not afraid to show off his socks. Welcome. We start tonight with the global rating agency's Fitch, which has hailed Egypt's move to reduce its subsidies allocation. Now, the firm says the recently announced fuel price hikes are an important step in reducing Egypt's budget deficit, which currently stands at 12.1% of the GDP. Now, in the last 3 years, a double-digit fiscal deficit has pushed government debt to over 90% of the country's gross domestic product. Now, this is a sharp increase from the previous 76.6% calculated in 2011. The country's debt has greatly contributed to a series of downgrades to Egypt's credit rating. Now, Fitch assumes that support, primarily from Kuwait, Saudi Arabia, and the UAE, will remain steady and anticipated that grants will be higher than expected. The agency is reaffirming its B- long-term foreign currency rating for the country on June 27th. All right, for more on reactions there in Egypt to the fuel hikes and reduced subsidy contribution by Egypt's government, we're now joined live by Yasser Hakim, who's with us from Cairo. Yasser, what's been the reaction so far from both the public and experts to this new hike in fuel prices?
Well, if we take experts first, well, they were fully supportive of these measures, and business community as well. They see that a bold decision that has come a bit late. It should have come maybe 20 or 30 years ago, especially with subsidies that are eating up more than two-thirds of the budget and causing the main expenses for the budget deficit. And now it's cutting down on these subsidies. So they see, as experts and economists, that Egypt now is on the right track. As for the people, obviously, the people are going through a lot of hardships, economic hardship, especially in the last 3 years after 2011 uprising. So they're a bit scared. Some are angry. Others have expected it, because the government has been saying for the past couple of months that there will be changes, there will be austerity measures. But the shock was that it was too high. 70% increase in some fuel products was a bit high for people. They thought it's too much at one point.
Now, is the government starting to take any steps to calm the fears of Egyptians who have already started to feel the economic pressure take hold there? Well,
the government has taken a few steps. First of all, it decided to supply, or actually dump, products into the market at low prices through the government-owned and state-owned shops and supermarkets. And that is to balance the prices in case the private sector increases their prices and the food prices go up or transportation goes up. The government is balancing this by putting the products into the market at very low prices, maybe 20% lower than market price, so to balance the prices. Second of all, the president and the prime minister met with all sects of the business community, with factory owners, with plants owners, and all businessmen, to try to convince them to keep their prices as it is. Yes, the cost of production is higher because energy prices have increased. But a lot of businessmen have promised to keep the prices as it is and do not in any way increase prices at this critical situation. Third of all, a new committee has been established by the government to monitor the prices in the market and try to control prices and control inflation in the market.
Now, how are the president and the government trying to convince Egyptians to accept these strict measures that are being applied to them, and is it working?
What he did is that he tried to talk to the poor, and he had a speech yesterday where he talked to the poor, and he said, as well as the prime minister, that a large chunk of the money, that the revenue would come out from the austerity measures, that's around $10 to $15 billion, will go to health projects, to education, to mega projects that will bring employment to many of the unemployed, and also to help the poor. So what he's saying is that he's reaching out to the poor, which account to more than 50% of the population, telling them that the money will help develop shanty towns and will help develop schools and hospitals free of charge for the poor. So this is how he's convincing the population that to sort of be patient now, because this will bring dividends very soon.
We'll be waiting to see. That's Yasser Hakim joining us live in Cairo. Now, moving to South Africa, where striking members of the National Union of Metal Workers of the country will take the latest wage offer from the main employers group to their members on Wednesday. Now, NUMSA spokesperson did not, however, elaborate on the offer. The striking workers have been out of work now for a week and are demanding salary increases of up to 12%. They're also asking for a ban on labor brokers. NUMSA last week rejected an improved offer from the Steel and Engineering Industry Federation of South Africa to increase salaries of the lowest paid worker by 10% this year. Now, companies like General Motors have been forced to halt production because of a disruption of auto component supplies. Staying with industrial action in South Africa, the National Union of Mine Workers has warned state-owned power utility Eskom to allow its workers to strike. Now, the union has threatened the company that it's sitting on a time bomb, citing that the workers will embark on a wildcat strike or an unofficial strike. Now, industrial action at Eskom, which provides 95% of the power to South Africa, may force vital industries such as smelters, miners, and factories to shut down. Now, NUM, which represents around 16,000 workers at Eskom, has already rejected 5.6% wage offer and is demanding 12% increase. Continuous work stoppages have subdued business confidence in the country, which edged up slightly to 89.7% in June. This is from 88.9% rather in May, hurting an already fragile economy there in the country. Due to the strikes in the country, South Africa's business confidence remained subdued in June. Now, this is according to a survey by the South African Chamber of Commerce and Industry. Now, the SACI Business Confidence Index edged up slightly to 89.7% in June, and this is from 88.9% in May, but was already still below the 90% mark that separates negative sentiment from positive. Angela Coppola has been following the developments in his country there in South Africa and now joins us live from Johannesburg. Angela, let's start with an update on the talks between NUMSA and employers. What is the feeling on the ground there?
Well, let's do a quick recount of what happened today. Today, the NUMSA National Executive sat down and looked at that revised offer from CIFSA. What we do know is that they're going back to members on Wednesday. We also hear from people close to the negotiations that in terms of the housing allowance, there seems to be a bit of movement from both parties to a deal. We don't know exactly what that detail is yet. We also know that the duration of the agreement, where CIFSA wants 3 years and NUMSA wants 1 year, it appears that there is a bit of a narrowing in that position as well. Where there is no movement at the moment is on labour brokers, and there's no movement on the youth wage subsidy. It does appear also that the CIFSA revised wage offer is no much closer to the 15% that NUMSA is now demanding. We do know that by Thursday, NUMSA will have a mandate from its members. Then they're saying to us that they're going to be going back to the negotiating table. Bear in mind also, Jitu, that NIASA, the bigger employer group here, is not part of this negotiation process at the moment. So either way, we will know by Thursday how members are feeling and whether there is any kind of deal in the pipeline. Jitu?
All right, now there's a push to have Eskom workers allowed to go on strike regardless of how essential their services are. Is there any chance of this actually happening?
Well, the short answer is it's unlikely. But unfortunately, Eskom also feels that they are an essential service. They went to the Labour Court last week, and the Labour Court agreed with Eskom that they are an essential service. It's also not surprising that NUM is supporting the NUMSA call that they should be allowed to go on strike. So for now, it's a standoff. The problem is that if they do go on strike, they're breaching their employment conditions, which means that there could be disciplinary action by the company against those striking miners. So at the moment, the situation is fairly fluid, and we don't know which way it's going to go. G2?
All right, and lastly, what areas can South Africa focus on to restore business confidence in the country?
Well, it's almost like a theoretical response here. The country needs a stable employment environment. Clearly, we don't have that at the moment. We've had 5 months of strikes on the platinum sector, and now we've got those 220,000 members in NUMSA that are on strike. There is also no increased productivity data or management in terms of increased wage offers. So there's a wage offer, there's an increased wage offer demand, but there's no productivity that's linked to it or increased productivity. So we haven't seen that. We're also looking at a consistent and stable government policy. We have that in place to a certain extent, although there are questions around land ownership. Then when we come to the big infrastructure spend program that government has been talking about for a couple of years now, it's in the region of around $80 billion US. We're waiting for that. It's a work in progress. As soon as that starts, then we should start seeing some movement there. Finally, you need an increase in consumer confidence. That's only going to happen when people have more money to spend or to save. G2?
All right, thank you for that update to the industrial action there in South Africa. That's Angela Coppola, live for us in Johannesburg. Now, we take a look at the markets that we track here for you. All right, let's take a look at the EGX in Cairo, closing the day today at 8,428.73 points. Now, this is up 1.14% points despite new fuel price hikes. The World Bank, Ethiopia eyes a place on the global wine markets list.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
The rebasing of Nigeria's GDP has been a long time in coming.
The information provides us much more scope to know what the structure of the economy is.
Welcome back. You're watching Global Business. Now, moving to the World Bank, which commits a record-breaking $15.3 billion to sub-Saharan Africa, and Ethiopia eyes a place on the global wine market. So, to sub-Saharan Africa's development for the July 2013 to 2014 fiscal year. Now, the bank delivered $10.6 billion in new lending for 160 projects for this fiscal year. Now, the International Finance Corporation investments on the continent are now up to $4.2 billion, with around $800 million committed to fragile and conflict-affected areas. The Multilateral Investment Guarantee Agency issued guarantees of $515 million to support projects in the oil and gas, power and telecommunications sector. Now, the agency also teamed up with Overseas Private Investment Corporation to establish a $350 million political risk facility that will go to support planned investments in sustainable agribusiness across sub-Saharan Africa. Looking a little closer now at the World Bank's decision to increase funding to sub-Saharan Africa, we're now joined live by Daniel Renches, who's with us from Washington. Now, Daniel, what is pushing the increased investment in sub-Saharan Africa now?
Well, I think fundamentally speaking, it's the data, because if you look back 30 years, sub-Saharan Africa had about 200 million people who were regarded as in extreme poverty. And if you look at 2010, that number had essentially doubled, whilst those individuals in places like East Asia, and particularly in China, declined very dramatically. So the World Bank's focus is on development, particularly for the world's poorest countries. And if you look at where the vast majority of the money's gone, it's the International Development Association, an arm of the World Bank Group. And last year, members of the World Bank pledged an additional $52 billion over the entire globe for this particular fund, which provides very, very ultra low cost loans and grants to the world's poorest countries. So there is a fundamental dynamic here that the World Bank needs to address the extreme poverty of over 400 million individuals in Africa. It sees some improvements. Obviously there is momentum in the economy, a great amount of growth, but also a long way to go.
Now, what priority areas is the World Bank looking to put the money into?
Well, there are several. Infrastructure has been the story over the past several years, and the IFC in particular is continuing to focus on that. At the same time, there is now a renewed focus on energy, and particularly on renewable energy projects. One of the big areas is hydropower, and the World Bank still sees a lot of potential for development there. At the same time, the World Bank sees, in particularly in places like the Sahel, North Africa, a really fundamental problem with high levels of youth unemployment. And to that end, they've invested a huge amount of money in trying to make higher education much more specific to particular areas of the job market in order to bring those individuals up. Yes, there will continue to be sort of emergency development assistance, and also I think there will continue to be a lot of focus on agriculture moving forward, making it much more sustainable, making it much more productive, enjoying better access to markets by improving infrastructure. All of those kind of things will continue to be a focus of the World Bank efforts to bring up some of the world's poorest countries.
All right, thank you for that analysis. That's Daniel Renches joining us live from Washington, D.C. Now we move to Ethiopia, where the country's parliament has approved a $9.2 billion budget for the 2014-2015 fiscal year. Now, this is a 15% increase from last year's budget. The budget was increased in order to boost spending on education, health, and infrastructure development. Strong state intervention has boosted the economy over the past decade, and economic growth is set to rise to 8.5% this year. However, the International Monetary Fund has warned that the Ethiopian government's huge spending on roads, railways, and power has started to suffocate private lending companies. The lender says a reduced public expenditure would make enough room for the private sector to access credit. Now, the 2014-2015 budget, unanimously endorsed by lawmakers, allocates more than 64% of its total for development spending. Joining us with more is Mariam Bamard, who's live for us in London. Mariam, Ethiopia's government incentives have helped to boost the country's economy significantly in the past decade. Now, can you tell us how were they able to accomplish this, and will this new budget increase go to encourage more foreign direct investment into the country?
Well, G2, economists are divided on whether or not the budget will attract new money. One major concern is the budget has put more than 64% of the total amount for development spending, and that's why actually the IMF is also warning that Ethiopia's huge spending on roads, railways, and even electricity is taking too much away from private lending, with very little access for the private sector to get credit. But others argue that FDI has grown dramatically because of improvements in the financial sector and better licensing procedures. In fact, more than 123 companies with a combined investment capital of $500 million US have launched operations in Ethiopia in the last 3 years.
All right, unfortunately, we're going to have to leave it there for now, but thank you. Mariam Bamard joining us from London. Staying in Ethiopia, South Africa leads the rest of the continent in producing some of Africa's best wines, and they're being joined by countries like Ethiopia that are working to establish an equally successful wine exporting industry. And as Gurum Challa tells us in our What's Hot segment tonight, based on its favorable climate, the country has more than a good chance of putting its name on the global wine map.
Ethiopia's Rift Valley is becoming the new sensation for vine growers, and together comes the country's #1 winery. Every year, this French-based winery produces more than 1.2 million bottles of red and white wine varieties, both for the local and international markets.
There is a very good green light in terms of both export as well as local market. Our major destination, we have already made export to China. We have already made export to neighboring countries like Djibouti, Kenya, Uganda, and we have also already an order from various European countries as well as USA.
The wine business in this Eastern Africa country is picking up well. Over the last 5 years alone, based on the emergence of the middle-class society, the demand for better quality wine is increasing.
Wine is a sign of elegance and style. But above all, if one takes the business itself of selling wine, for example, then it brings a lot of money. In return, it stimulates any investment activity in any given country.
Drinking wine is one of the best things to do for me. It has a variety of health-related benefits. Your blood circulation will be healthy and you can keep your heart well also.
Based on the availability of quality wine brewed in Ethiopia, wine bars like this one are attracting significant amount of customers.
Our main reason to have this wine house here in Zawani is just 5 kilometers away from here is where the biggest vineyard and winery is. So as in the rest of the world, we have established a bar next to it. So far, the demand from our customer side is increasing.
The future is also bright for the wine business in Ethiopia. There is more. The investors themselves want to put the country in the world's wine map.
We would like to put Ethiopia on the map of wine. The reason behind is Ethiopia is not much famous basically in exporting standard wines. So from this notion, actually it was the interest of this Castel Group owner from France.
Grumtala CCTV, Zawai, Eastern Ethiopia.
We're going to take a short break, but here's what's coming up. When we return, we talk about fashionable socks and the entrepreneur behind them. Welcome, you're watching Global Business. Now, have you ever thought of making a fashion statement with your socks? Well, some might have, but it's pretty unlikely for most, as socks are a wardrobe item not often focused on. But a young entrepreneur in South Africa wants to change that. He's adding new meaning to simple socks by making them the new fashion symbol for men. Dimitri Naidu tells us more in our grassroots segment tonight.
At 1.9 meters, Sibusiso Ngwenya is taller than most men. Finding pants to suit his length has always been a struggle. His socks have now become the center of attention.
My socks were forever showing, or my shoes. So I was like, you know what, let me just continue giving people a show. Let me just show off my socks. And that is how my sock fetish started.
Ngwenya, at just 22 years old, moved from sock collector to sock maker. Inspired by his height, he decided to design smart socks, making it visually appealing to those around him. He now has his own label, Skinny Sbu Socks, which is fast becoming a hit.
These are some of the socks that Sibusiso makes. As you can see, some really funky colors, but he's quite serious about his target market. He wants to target the up-and-coming smart black professional.
We are targeting a 2014 man. You know, he's an international citizen. He travels regularly because of his job. He's probably on Instagram and keeps 2 jobs, has a business somewhere. So if you look at his life, he's almost aware of what he wears or has a fashion sense.
In a year, Ngwenya has moved from buying and redesigning socks to producing them locally. While they're meant to be fashionable, they're also strong and comfortable.
It's a very beautiful mixture of mohair just here for comfort, and then we've used bamboo here so that your socks can last longer on your heels.
At just $5 a pair, you can have them delivered to your door. They also retail exclusively at a store in the trendy Maboneng precinct in Johannesburg.
We started off, it was a bit quiet, and then things started to build up because of obviously people demanding more and wanting to wear more skinny smooth socks. But now it's gotten to a case where we get stuck out.
At the moment, Ngwenya sells 500 pairs of skinny smooth socks a month. He wants to increase that to 1 million. Ngwenya also wants his trendy sock brand to reach men across the continent. Sumitra Nadu, CCTV, Johannesburg.
All right, let's take a quick look now at how your money is trading. Looking at South Africa, the country's rand strengthened nearly 1% against the dollar on Tuesday, outperforming 24 emerging market peers. Now, this is amid hopes that a week-long strike by metal and engineering workers could be resolved. And ahead on Global Business Africa tomorrow, we keep an eye on developments in South Africa's industrial action. Will the National Union of Metal Workers of South Africa reach a deal as anticipated by the country's labor minister? And we have details about a Ghanaian company that is turning used plastic water containers and advertising posters into a range of high-end bags. That's it for this edition of Global Business. Remember, you can send us your feedback to Global Business Africa at cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I'm G2 Abraham. Thanks for watching.